Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar is absolutely filled with Black Star events. Kicking things off at 2:30 South African Standard Time out of Great Britain is the annual budget release. Now, this is one of the largest reports coming out of Great Britain on an annual basis and will absolutely create extreme volatility within all our GDP pairs. Additionally, at the same time, the US Producer Price Index report, as well as their core PPI, accompanied by their retail sales and core retail sales reports, will also be released at 2:30 South African Standard Time. All of these creating fantastic trading opportunities within the market. As always, just ensure to use your risk management appropriately.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar traded little changed after strong consumer price data revived the likelihood that the Federal Reserve will hike interest rate next week as fears of turmoil spreading in the banking sector faded. The dollar index fell 0.087% as Treasury yields jumped a day after the 2-year note, which moved in step with the interest rate expectations, plunged the most in a single day since 1987. The euro edged up 0.09% to $1.0739, but the dollar gained against the safe haven yen and Swiss franc. Having a look at our analysis currently on GBPUSD, we can see that we are currently hovering just inside that primary resistance level at 1.216. Should this resistance level hold up and this specific pair fail to break, we could see this one fall all the way back down to retest that dynamic support level at 1.2048. Should this level, however, be broken, we could experience another rally in our GBPUSD pair all the way back up to that next primary resistance level at 1.24. Now let's move over and see what's making headlines on Wall Street. Indices bounced, posting a positive session with the Dow Jones lifting from a 5-week low as traders reacted positively to weakening inflation pressure following the seizure of SVB Financial Group and Signature Bank. Shares were propelled higher by gains in the technology, financials, and consumer goods sectors. The Dow Jones Industrial Average added 1.06%, while the S&P 500 index gained 1.68%, and the Nasdaq 100 index added just over 2%. Having a look at our analysis currently on Nasdaq 100, we are currently hovering just inside that resistance zone at 12,200. Should this resistance zone hold up, we could see a potential break back down to either test our dynamic support around that 12,100 or our primary support at 11,900. Should this resistance level, however, be broken and we can get a close around that 12,250 level, we could see a potential rally in this specific index all the way up to that lower support level at 12,400 or even higher to our primary resistance at 12,700. Now let's move over to commodities. US crude stockpiles resumed their climb last week after a 1-week decline. While inventories of fuel products extended declines sharply, Petroleum Industry Group API said in a report that it is likely to be matched to some extent by the forthcoming government data. US crude inventories rose by 1.155 million barrels during the week ending March 10th. Having a look at our analysis on crude oil, we fell yesterday all the way back to that primary support level at $71 a barrel. Now we are currently hovering just within that actual support zone. Should we get a close above that support zone around that $72.50 a barrel level, we could see this specific instrument rally all the way back to that lower resistance at $74 a barrel or even higher to our next primary resistance at $76 a barrel. Gold prices fell from a 6-week high yesterday as a mixed reading in US inflation brewed some uncertainty over the Federal Reserve's stance on monetary policies. while concerns over a banking crisis in the country persisted. The yellow metal rose sharply in recent sessions as the collapse of several US banks triggered a rush into traditional safe havens. Pressure on the banking system also saw markets beginning pricing in a less hawkish Fed, on bets that the central bank will try to prevent more economic turmoil. US consumer inflation eased as expected in February, which data showed, but the core inflation unexpectedly rose from the prior month, keeping the pressure on the Fed to tighten policies further. Having a look at our analysis on gold currently, we failed to break that primary resistance at 1910. We are currently hovering now around that 1901 level. Should we remain in this area, we could see this instrument sell all the way back to our next primary support level, which is also where our current dynamic support is hovering around that 1865 level. Should we, however, attempt breaking this primary resistance again, and we can get a close around that 1915 level, we could see this specific pair rally all the way to that next primary resistance at 1950.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.